The other thing is I said that I thought when gold really started to make its move, it would be driven by foreign buying, not U.S. buying. And the reason is because when a country's currency starts to lose value and go into crisis, that is when those investors really start to buy gold. And in 2022, when the dollar was really high and everybody else's currency was really low, that's when the rest of the world really started to buy gold. And then as the dollar started to weaken, it got since 2022, it really got a tailwind. But since we first started talking about it, the dollar is higher than it was, gold is higher than it was, US equities are higher than they were. And so this is all kind of playing out. But the point is it's been driven by China buying, by Europe buying, by Asian countries buying. It has not been driven higher by US investors. It's not to say the US investors aren't participating, and it's not to say they're not buying, but that has not been the primary buyer. The primary buyer, the slide that we started off with, it's foreign central banks buying and foreigners buying. And a lot of the reason that China's buying is people that don't wake up in China and say, Jay Powell is out of control, I'm going to go buy some gold. They buy gold because they don't trust the yuan. That is why they buy gold. But anyway, the foreign buying of gold has certainly played out. And the other thing, probably the most controversial part of the whole first interview that I gave was I said, dollars and gold will rise together. And some people have said, of course, that cannot happen. Dollars and gold trade opposite each other. You cannot say the dollar's getting strong if gold is rising because that proves that the dollar's weak. I literally explained this in the very first interview, that what I was talking about the dollar rising, I was talking about its foreign currency peers, fiat currency peers. And in the same way that the dollar and the yen could rise versus the dollar and gold could rise versus other currencies. And so this is really, really important. And when people tell me if all fiat's getting debased, it doesn't matter and you should just buy gold. Well, if you're just a gold investor, sure. But if you operate a business, if you operate on the global stage in some kind of an economic manner, the dollar rising versus foreign currencies has a huge implication for markets. Now, if you're not involved in the stock market, if you're not involved in the bond market, if you're not involved in commodity markets, and if you don't run a business and you live on a mountaintop in Montana and you're self-sufficient, then maybe fiat versus fiat doesn't matter. But if you operate in the real world, it does matter. And that's why I think it's important to really, really understand this. The dollar rising versus foreign currencies is extremely important. And the dollar falling versus foreign currencies is extremely important because what that does is it kicks the can down the road. Look at what gold has done since the first time, I started talking about this entire thesis. Gold has basically doubled over that time period, more than doubled, and it's done fantastic. And as the whole system is starting to come under question, gold is raising its hand and saying, here we are. Now, it's not to $5,000 yet, and it's probably due for a pullback, but it will eventually go to $5,000. But as crazy as this chart looks here, it looks even better against foreign currencies than it does against the dollar because foreign currencies have fallen even more versus gold than the dollar. So the dollar and gold have risen versus fiat peers. And while we're talking about gold here, I want to mention again, you guys have heard me talk about this a little bit. I recently joined the board of Monetary Metals. I opened an account with them. Gold is next to real estate. Gold is my biggest single holding. And I opened an account with them. And the reason I opened an account with them, the reason I joined the board is I really believe in this company. And the reason I opened the account is having an account with Monetary Metals is traditionally there's been a couple ways to own gold. One, you own bullion or you own coins. And that's basically, you're risk-free, you're very safe, you're on the left, there's no counterparty risk, it can't get inflated away, it can't get, all that stuff. And then on the other end, you own gold miners, which are very volatile. And, for years they didn't do anything. And this year they're having an incredible year, but they're in equity and they're much more volatile than your bullion that sits on the left side. Monetary Metals is a way to own gold and have it in between there. And people tell me all the time that gold is money. Well, this is a company that's actually using gold as money. And so I always tell people, if you believe gold is money and you want to try to reintroduce gold to the monetary system, having an account at Monetary Metals is the perfect way to do it. Now, is it as safe as just putting bullion in a vault somewhere? Probably not. And so you should definitely keep some gold in a vault somewhere. We have a couple different ways that you can subscribe to our research. If you go to research.santiagocapital.com, there's a couple different levels. There's our main level, which gives you access to a number of different reports. And then there's the premium version, which gives you access to even more reports, more in-depth reports. A couple times a month, we do a live Q&A, and you get access to basically everything we do.